Ladies and gentlemen, welcome back to another video. Today we're going to discuss some puts that I've sold recently. But besides from that, we're also going to talk about some of the downsides of selling calls that you don't really hear from a lot of the other YouTubers that do this. But before we get started, if you like this kind of content, please consider subscribing. That way you can follow along as I document me trying to sell options to try to generate some income. And you can watch me either succeed or fail. And regardless, hopefully it's entertaining for you guys. And so the market was up substantially today, thus making it pretty hard to sell puts and make any real income that way. I did end up buying to close a few of my positions and opening some new ones. So the new ones I opened didn't really give me much premium because of a lot of the stocks increasing in value. In the last video, I talked about how I was going to run the wheel strategy on Robinhood, see if I could generate me $10 to $20 a day. And so far, that has been the case. That goal has succeeded. However, I wanted to talk about some of the downsides when you do this. So if we look at this put right here that I sold, I got $8 initially in premium from selling this put on Robinhood. And it was in the money, so I acquired the shares. And I guess this 3 actually needs to go here. And so I got $8 in premium for that. And then I also sold a call on Robinhood, gaining $49 in premium. That expired at the end of this week. And if things were to go well and I were to sell these at the end of the week at $25, I would also gain $100 in just capital appreciation, which sounds great. And in that video, which by the way, feel free to go check it out, it was my last video, I talked about how I usually judge like an investment or a reoccurring revenue stream by like, will it afford me Chipotle each day? And I think after doing the math, it was like $22 a day, including weekends, is what I would get from this. So that's pretty good in my book. However, when you sell a call, you have the risk of the underlying stock skyrocketing and going up in value dramatically. And that's exactly what happened on Robinhood today. If we look at this call is now worth $490. And I sold it for $49. So it 10x'd from when I sold it. And though I'm going to get $100 in capital appreciation, if I were to just hold on to those shares and just sell them right now, I would get $572 if my math is correct, which in terms of Chipotle is quite a lot of Chipotle compared to $100. And maybe some people that sell calls on YouTube, they won't talk about this and they won't even like acknowledge the downsides. But to me, it's okay because what I'm doing when I sell that call is I'm getting a guaranteed premium. And I'm taking on the risk if that stock goes up, I end up limiting my gains. And to me, that is worth the guarantee, at least for this portion of my portfolio, because the rest of my money is in index funds and such. So that will still go up as the market goes up in general. But as for these individual shares, I'm just accepting the fact that I am going to get that guaranteed premium. And if it reaches $25, I sell it at a guarantee of $25 a share. And you just have to accept that. Because if you dwell on this and you want to sell options, I don't think you're going to come out very happy. So I just thought I'd talk about that. I'm going to see how the rest of the week plays out. I don't imagine it taking a dip, so I probably won't sell many good puts for the rest of the week. But as always, I'll keep you guys posted. Hopefully you found this video entertaining, and I hope to see you in a future video.